If you have $100 to invest, you may be wondering how to best use it. Options include micro-investing apps, robo-advisors, and bond funds. While $100 doesn't seem like a large amount, investing it regularly will add up over time. Here are 6 smart ways to start investing with $100. Stocks. One of the most common ways to invest a small amount of money is in stocks. Many people believe that investing in stock is the most affordable and accessible way to grow wealth over time. It's true that the stock market is volatile, and it's possible to lose all of your money if you're not careful. However, if you're smart about how you choose to invest, you can often make your money work for you by investing in stocks that will increase in value over the long term. Before you invest, make sure you take care of your more immediate financial needs. This means saving up a rainy day fund, paying down debt, or building an emergency savings account. It's also important to consider your motivation for investing. Whether you're investing for retirement, college, or a big trip, your reason will impact what type of investments are best suited for you. Getting started with investing can be difficult, especially for beginners. But there are plenty of tools and strategies available to help new investors get started. Some of these include using a micro-investing app or robo-advisor, which can help you manage your portfolio and earn a return on your investment. Many of these services offer low fees, which can help you maximize your profits. Another option is to invest in an index fund or exchange-traded fund, ETF. These funds are a collection of investments that track a specific theme or industry. These funds can minimize your risk by diversifying your portfolio. Additionally, many of these funds have a low minimum investment. Finally, you can use a savings or spending app to automatically invest your spare change. These apps can invest your spare change into professionally curated portfolios based on your goals and risk tolerance. Some of these apps, like Acorns, even allow you to invest with as little as $5. Regardless of how you choose to invest your $100, the most important thing is to start somewhere. If you're able to commit to making a small investment every month over the course of a year, your $100 could turn into much more. Bonds investing can be a great way to grow wealth. But it's a common misconception that you need to start with thousands of dollars. Fortunately, it's possible to begin investing with as little as $100. In fact, you can use that money to make your savings work harder for you. There are a number of ways to invest $100, from traditional stocks to mutual funds and ETFs. However, one of the most effective ways to invest is to buy bonds, which essentially let you lend money to governments or corporations. Bonds typically have lower risk than stocks and offer a steady income. You can find a variety of bond investment opportunities online, including the government's treasury bills and bonds. Another great way to invest your $100 is to put it in a high-yield savings account or CD. These accounts pay higher interest rates than traditional savings accounts and can help you reach your financial goals faster. But be sure to check out the fine print, as there may be transaction limits and fees associated with these investments. Finally, you can also invest your $100 into a low-risk option like a stock index fund or individual company shares. These investments are a great choice for beginners because they typically have lower risks and can still provide a good return on your investment. Some of the most popular options include the S&P 500, which tracks the performance of the largest companies in the United States. The key to success in investing is to start early and keep it up. By following these tips, you can use your $100 to build a substantial nest egg and achieve your financial goals. Cryptocurrency. Cryptocurrency is an investment that involves buying and selling virtual money. It is typically traded on an exchange platform that offers a variety of deposit and withdrawal methods, including bank accounts. Depending on the exchange, it can take several days for funds to become available. You should only invest in cryptocurrencies if you are comfortable with the risk and volatility involved. In addition, it is important to invest only what you can afford to lose. Investing more than you can afford to lose could result in significant losses or even financial ruin. Before you start investing, make sure that you have enough money to cover your bills and debt obligations. This will help prevent you from missing payments and damaging your credit score. In addition, you should have a savings account and emergency fund to protect yourself from unexpected expenses. Moreover, you should keep in mind that high-risk investments like cryptocurrency have a higher chance of losing value than more stable investments such as mutual funds and bonds. A common rule of thumb is to not put more than 10% of your portfolio in risky investments like cryptocurrency. However, this depends on your personal risk tolerance and your goals. Some people prefer to diversify their portfolio with a combination of stocks, bonds, and other safe assets. This strategy can help minimize your risk and maximize your returns. There are many ways to invest with $100, including signing up for a brokerage account and purchasing shares of publicly traded companies. Brokerage accounts are taxable accounts that allow you to invest in different types of assets, such as mutual funds and stocks. They can also provide you with research and recommendations. However, you should only invest in a reputable brokerage firm. Another way to invest with $100 is by using an app that helps you save spare change. These apps round up your purchases and invest the extra money in professionally curated portfolios that are tailored to your risk profile and investment goals. While it takes decades to become a millionaire, you can start investing with just $100 and watch your money grow over time. It's important to remember that most regular people who have built wealth started with small amounts of money and kept investing. Robo-advisors. While $100 may not seem like a lot, it can make a big difference if you invest it wisely. If you want to start investing with this amount, it's important to compare options before diving in. Some of these strategies involve using a robo-advisor, which is an online investment advisor that uses automated processes to manage a portfolio. Robo-advisors offer a low barrier to entry and can be suitable for people with no prior investment experience. To use a robo-advisor, you will need to provide some basic information about yourself and your financial goals. Then it will create a portfolio of investments based on your answers. These portfolios usually contain pooled investments such as exchange-traded funds, ETFs, that track a market index or sector. Some robo-advisors also provide access to human financial advisors for an additional fee. You can open an account with most robo-advisors with as little as $100, and most have no minimum deposit requirement. You will need to link a bank account to your robo-advisor so it can automatically transfer money into your account each month. You can then choose which diversified investments you would like to hold in your account. For example, you might opt to invest 50% of your money in the S&P 500, 25% in international stocks, and 25% in bonds. Robo-advisors will then periodically rebalance your portfolio so that it maintains this allocation. Some robo-advisors also offer low fees, which can make them more attractive than traditional brokerages or mutual fund companies. For example, Betterment's management fees are only 0.25% per year. Moreover, this investment service has no account minimum, and it offers a variety of goal-based tools and an excellent tax strategy. Wealthfront is another top robo-advisor with affordable fees and no minimum account balance. This firm also has a large range of investment options, including socially responsible and crypto portfolios, as well as paid access to financial advisors. However, some individuals have complex finances that require a personal touch or unique investment solutions. These might include people who own real estate or have recently inherited assets. In these cases, a robo-advisor may not be the best option.